Sniper here, Crypto Sniper. Yes, talking to my crypto friends and anti-fiat friends in whole. Remember, whatever I say to you, we are broadly long-term macro bullish. However, there are many twists and turns in the tale. It's never just a straight line story. There's a twist in the plot many times. And we are going to talk to you about what I see coming for crypto specifically. And also we'll just give you a small tot on the anti-fiats. Still feel that we're going to see further downside on gold and silver. Potentially, it's at a very key level at the moment. And when, or if, more importantly, if, because everything is a probability game, we don't know anything. We are price behavior specialists. We just look at probabilities, and probabilities sometimes it does 180 degrees the opposite of what you expect, and you can't do anything about that fact. But they often happen more regularly. So probabilities serve you, patterns and probabilities serve you. And what we're going to discuss today is what is the outlook for crypto. And as I say, because we talk about anti-fiats, and that crosses both the Market Sniper channel and the Crypto Sniper channel. So if you've not subbed to the Market Sniper, go and sub it. Because what the dollar index does next, what the gold does next, what the silver does next, does actually have bearing too on crypto. Are we in a fiat confidence or a fear mode where everyone is rushing into fiat? Or are we in the backlash inflationary mode where everybody's rushing into restricted quantity assets, such as Bitcoin's number, the amount of gold in the world, the silver in the world? So we go through these ebb and flow cycles. Another important point, just while you're watching, look into my eyes, please share, by the way. This is going to be a short live stream, so we wanted to be punchy and short. Reason why is we're going to be doing non-farm payrolls today. This is a big day for data. And what you need to do is grab the link that we'll be sharing, and you can come and get the full version of story. I'm giving you a top line and I'm giving you a call. It's totally for free. There's no ads on the channel. The only thing we ask is you give us one share. If you give us more, we're truly grateful and we say thank you. We want to help you build wealth, whether you choose to engage with us or not. And we want to give you our best views, and it is a sample of the best views that we do in our premium communities and area. So the only monetization is if you ever decide, and it's a small percentage of people, to join our community. They are people that are truly taken in by what is potentially a life-changing event where you can become a lifestyle-based trader. I was out riding yesterday just to do something different, and we will, you'll be able to trade from home, be COVID-free, not on transport, in an environment where you like a coffee shop nearby you. It is possible. It's not suitable necessarily for everybody. But you might just appreciate this from an investment point and be taking all these messages and never intending. And that's absolutely okay with us, because not everybody is our audience and our community. We just ask for that share. Okay, so without further ado, I'm going to turn to, in fact, I'll start with Bitcoin. And then I'm going to roll into the one I think is my absolute fave, actually, for a sell. A sell. In short, I am currently stable coin on investment in terms of my crypto allocations. Let's look at the chart. Alex brings it up, and you should see it to my, what side am I? Top left, top right, one of them. I'm too dyslexic to work it out. Bitcoin. What did it do last or recently in terms of its price behavior? This is a 4-hour chart. So we know where we stand, guys, on the big macro monthly, double weekly chart on the big time frame. In our view, and we said this a long time ago at the 14,000, just sub the 14,000 level, on the big time frames, we were going to have a down leg. It was going to sell off. And in actual fact, there is real case for crypto to be turning down at that juncture. But overall, that it's in a macro, super macro continuation pattern that we expect to have overperformance that will not only take you past the 20K, but in our view, there's a 25 to 27K range that we'll be able to finalize and tighten up later. and we expect overperformance to that one. So often we get structure and the target is the target. It'll just run and then you'll have a pullback. Despite the fact that we expect overperformance, it's still likely that there will be some degree of pullback if it makes that 25 to 27K range. And then on top of that, further to go with the run. But where are we now? And overall, our assessment is we're in a little bit of a bouncing around area that actually sees Bitcoin slightly weak. And we've suspected all along on our bigger time frames that we need a little bit of a deeper pullback for the continuation pattern to have the structure that we expect it will have, which will lead to the macro bullishness. So we are trading the slightly shorter times. You'll notice I'm on an H4 here, which is 4-hourly chart and capturing that data, not the weekly. So remember, you always have to understand when someone says, are you bullish or bearish? What time frame? Annually, for the next 5 years, I'm absolutely on the bull side. But that doesn't mean I don't expect an opportunity to buy it cheaper before that macro run. And that's pretty much my message to you now. So this overall is the structure that we have. So I'll just pull it through. Got some interesting boxes over here. Now overall, in this last, from the COVID-19 lows, this is our current high point, high water mark, just sub the 12,500. Let me grab my favorite color, TG pink. And that is roughly our high. Since trading sub 4K, where Bitcoin actually lost 65% of its value on the pandemic from its high, its last relative high, inside 2 weeks. So that is well past the halfway mark for a haircut. You're left with 1/3 of your value. Bear that in mind. So all of those that say, well, I just will hodl and it will be fine. Yeah, hodl away. I personally, when something's going to go down to 1/3 of its value that it was 2 weeks before, I personally prefer not to wear that haircut. And the game is to accumulate Bitcoin value if you're a hodler. So, you know, if you know that there's going to be some form of a sell-off, maybe do something about it. You can have varying time frame pots, if you like. Your investment pot, your medium time frame, and your short time frame. We talk about leverage as well, no leverage, light leverage, and strong leverage. You can also do that in your time frame. So if you're uncomfortable with what we're saying, hold an investment pot with 1/3, hold a slightly more actively with only 3 major sells and buybacks in a year. Restrict yourself to 3. In other words, trade the major moves and otherwise be sitting. And then if you want to be slightly more active, have a 10 pot where you have 10 trades or 1 a month. And you don't have to use them, but you can. So in the same way, you have a 3 pot in terms of leverage, 0, light, shooting for the moon. You can also have super macro, trade your super macro, hodl that one. And if you're adding value in the other 2, maybe you'll reallocate some into your 3 macro trends. Basically, what I look to do is to capture between 1 and 2, possibly in a very busy year, 3 major structural mega moves for the 18-month year period, because they often breach a year. So last year, for example, we said you absolutely have to bias gold long and oil short. And we do relative value analysis. We looked at gold and oil, and we said there's going to be a major swing in the valuation. That played out over the course of the back end of last year into the final events of CV19 at its peak. Other things that we've done, Euro Swiss franc collapses, things like that. Macro calls where 30% on currencies are made. So really, you only need to get one of those major themes right over an 18-month year period to do exceedingly well. And you can attempt to trade 3. And you can be entirely wrong on the other 2, or they get postponed, delayed, rewound up, roll into the next year. It's a game of patience. We're not day traders. It's lifestyle trading. Anyway, back to the cryptos. That was just a bit of explanation. What is going on here? Well, there's a couple of things you need to be a little bit concerned about overall technically here. For one, there's a kind of, and at 11,200 that is, I'll put it in blue. You can see I've marked that. There's a kind of structural neckline there. This was a blow-off move that was getting up off the last pause period in and around the 9K. And you have that kind of neckline over there. So that was jumping onto that ledge. So I treat this more as a left shoulder, but you could say it's a complex left shoulder like that, two-shouldered shoulder. It sometimes does happen. That's your blow-off high. Look at that mooning wick with no follow-through. That is a real stamp on the head when that occurs, because that implied immense momentum, and it hit a level and it stopped dead in its tracks, and it got taken entirely back and some. So that's kind of like, you're starting a fight in the bar and you're handing out facial slaps, and then somebody just punches you so hard in the nose, you roll 10 times and you're standing back at the door halfway outside the pub. You ran into the bigger bully and he put you in your place. And this is a little bit what's happened in a price behavior level at the 12,500 level. Boom, it was done. It didn't come too violently down. It had leg up, leg. There were dip buyers coming up under that. And then you got the rally back up to this level. You couldn't make a new high. What happened subsequently was really, really violent. So you have your left shoulder here. You have your head there. And then you got this right shoulder rally that died in the key levels of significance that we saw there. That was the first inverted HVF. Perfectly, it died there. And then the momentum here was truly brutal. And this actually saw Bitcoin catch up with gold. Gold had already had its highs made at the 2000s and 70s odd in dollar terms, and had taken a smack in the face. That was during this period. At that point, crypto was showing relative strength. It pulled back, but it didn't wet the bed. Subsequent bump on gold, and then the next down leg, and suddenly crypto was playing catch up. Look at that viciousness of the sell-off, small rising wedge at that neckline 11.2, and that head and shoulder targets were made all on wicks, perfectly made. So actually the last major pattern that has performed on the 4-hourly time frame on crypto, the god market of crypto, Bitcoin, is a 4-hourly head and shoulders that smashed down, where if you'd been early and confident and taken shorts there, you would have been very well rewarded on the 1190, the 12K breaks. You would have run it all the way down to 9.9. Yes, based out, rounded bottom, lots of buying wicks. What did you get? You got your rally back up. Where did this rally die? Again, key level of significance through there, 11,200. You paused on that rising wedge and you broke it with real violence thereafter. You broke it with real violence thereafter, after getting support a number of times there. You can see it. This was slightly different because this kind of was jumping onto the ledge for the first time. Thereafter, you were sitting on it with your left shoulder, head, and right shoulder. Okay, good. So it brings us to, where are we now? Well, we're not taking back the neckline. That's been shown. Once we got back up in the vicinity of the neckline, you got another mini head and shoulder. There's the neckline there, and you absolutely binned it down and overperformed on a shorter time frame structured head and shoulder. Down, down, down you went. You made it here. You had a little bit of continuation and you spilled a little lower. This gives us a very flat bottom from the lows. That is bearish. This is where everyone gets it wrong. It is bearish. So you will learn more on the non-farm about what we see coming next, how far we think it will go. And we'll be looking at gold, silver. We'll have the traditional markets, indices, equities, the dollar index. We're going to see the non-farm number come on. Dollar index is going to be very interesting, what the dollar will do next. It's also returned to a neckline, incidentally, after having a move up. So it's been soft for a while. So Bitcoin and Ethereum, that I'll be coming to, crypto generally, has been weak on a weak dollar. The weak dollar is not very pro-fiat, yet you're getting relative weakness on cryptos. Now, if you think that's a bullish signal, I've got a bridge to sell you. Okay, it isn't. So if we clear that and we just broaden this out, let's get out of drawing mode first and go back into the more recent time frame. So this is the Bitcoin. What is it doing? Now, the important thing is I get a lot of comments. Everyone loves to see you be wrong and say, yeah, I got you, boo-hoo, etc., etc. It's getting better. We tend to just get rid of the morons. We don't chase numbers on the channel. We just want nice interactions. And I'm not trying to say people can't criticize constructively. But what's first going to happen, let me be clear, is that you're probably going to have a rally. So you might see I've drawn a falling wedge here. And you can see some wick buying the plunge there, there, and there. So we're not yet done with the structure of this pattern. So first it goes up. That's a good thing if you're long-term bearish, or not long-term, it's not super macro long-term, but 4 hourly, medium term, let me rather specify bearish. That would be a medium-term time frame for me typically. The 4 hourly is a good time frame to trade off, personally, for me. It's not schizophrenic. It's not 5 minutes, 15 minutes, and even the hourly things can change if you step away from your computer in a short time. 4 hourly, big structure patterns, generally higher level of compliance to the patterns. They're not just formed on fluke or a bit of churn. There's real distinct moves in each level. So for many people, they ask about time frames. From the H4 upwards, good quality patterns, also in my view, higher probability of outcome, which we call a pout score. But anyway, that's getting into other stuff. You want to learn about that, you can come and join us in our community. So a bit of a falling wedge actually points to the fact that you may in fact get a small bump now. Now, not all falling wedges bump up. You'll learn about the type 1s, 2s, and 3s wedges as well on our content. Link below. Click get started, have a chat with another HVF person just like you from this YouTube channel, maybe a year, 2 years ago before you, and ask them about the details. So it could go up first. This gives you an opportunity. How will I be trading it? And bearing in mind, I lose trades all the time. I close them quickly. I don't tolerate big losses. So, can totally be wrong on this. But the probabilities point to some form of a rally at some point. Maybe it'll be a channel, maybe we'll go into a rising wedge, something like that. But there will be a zone of potential selling somewhere along there that you can sell short. So setting a trap for Bitcoin, if it's to do what we expect it to do, is something you can do. And that would be in between the 10.6 maybe, or 10.550 to 10.7s. And you can decide that. We drop down time frames. We look for key levels of significance. There's lots of structure I've drawn in here. Megaphones, again, head and shoulders. And I'll be discussing that in non-farm in more detail where the idealized level would be. If you're interested in that, you can jump it. Let's be clear, this one trade with moderate leverage can do all you need to get you onto our program, not just on our self-study, but on our main program without having to have a big account. If we're right, and it could also cost you something if we're wrong. But the difference between what it'll cost you and what you can potentially gain is substantial in terms of reward. And we will go through this whole trade in our Crypto Friday Finds, the second half of our non-farm after the half-hour lunch break. We do traditional markets first, we have a half-hour lunch break, and we'll do Crypto Finds. So the non-farm link is below if you want to go through the full deep dive. This is giving you a little bit of a heads up. So in anticipation, we would expect something like this, maybe not as high, and then we will have a setup for the downside. And overall, it's typically continuation, because that is your big brutal slap in the face where you had your attitude adjustment for being a bully in the bar and you ended up rolling over 10 times and now you're not nearly as tough as you thought you were. And that's where Bitcoin is right now. That is where Bitcoin is. We would expect this move to break to the downside. So the full trade with risk reward will follow in non-farm. What about Ethereum? What you want to always see in crypto is that you're not getting divergence of activity. If you want to call a major like Bitcoin short, you should actually be seeing some degree of confluence or similar in the largest of the alts. So the big alt boss for me is Ethereum, and we'll go straight to him. And in actual fact, I prefer this structure even more. And remember, this is silver to gold, Ethereum to Bitcoin, a higher beta. It ran all the way to a super target that we had in our community at $478. It didn't go much further than that, which was literally getting out very close to the highs. I think you traded 487 in total. So 478, I'm talking from the 200s, the macro design. At the same time as we had the gold on the euro and the pound to go to where it went and the targets it made, literally getting to the very close to the tops. Ethereum came very close to the top. HVF method is unbelievable. It's your ability to execute on it that will come under challenge, and that includes me. HVF method got 9.9 out of 10 for gold, silver, Ethereum, and the crypto alts. We called the crypto alts bull. We said it a long time ago. We had that. You watched Ethereum go from, you got it at low 200s to 478. If you got out, you're laughing, and you could have leveraged along the way, and you would have had multiple smaller time frame setups. You should have made a lot more than you probably made. And even I say that to myself, although I did very well out of it. Just because you don't ever perfectly execute, but you should. At least you have guidance, and it keeps you on the right path, even though you don't necessarily nail the perfect line. It keeps you on the right path, not going off into the jungle. So Ethereum, look at this for a slap in the face. You've dropped sub that value, 310. You barely hung on to the 300 handle after touching virtually 500. You're in the late 80s on your high. 4880, let's just say 488. Let me just go pen draw. You got 488 odd dollars, and you came down to about 308 there, give or take. I haven't checked to the cents and the pound. And as I say, you want to watch this trade. You want to know your full RRR that we're potentially going to go and where I'm probably going to set the traps. I'm giving you the broad concept here. You can get all the more detail in our crypto finds. That's a big, big smash. And that was Ethereum's high since the CV19 lows. So what did you get? You got a channel here. You were trading along the channel. You let go of that channel. Boom, you bounced in that legacy HVF funnel, and then you smashed it down. You smashed it down to the next funnel. You wound up there, which was very much in sync with silver and gold. We were already short silver and gold here, and we added a little bit for short-termers. That target was made, and then you rallied back. Now you're broadening, and you made marginally higher highs. Terrible thing to do. It's a ascending megaphone on a bull pole. It's a sign of a top. You should have, could have, would have got short anywhere in this momentum over here, and you certainly should have on that working neckline where you got a bit of buyback, hammers, and the next spill. And now again, also a little bit of a falling wedge, but very flat lows. Low 1, your relative low 2, and you're searching for where that low might be. So the trade might be watching it make that low and then setting a trap for it on any rebound. How high will you rebound? More details when we do crypto finds. But the scale in here is going to be high. So the overall move there, I think it was around $400 that you fell just short of, is still near on $100 just in the rally, how high you rallied. We expect a similar $100 from where we will funnel out on this setup. So that's going to be to the downside. And it's the first inverted in a new trend. So there's going to be fear and loathing and deflation and everything. Look at this. Dwayne Johnson, the puffed up bodybuilder wrestler, coming and doing his big prognostications. Me and my family have CV19. Just want you all to know it's been tough. And then later bouncing back up. Don't forget to vote Joe Biden. What a controlled little shill. Obviously, he's doing all he's meant to do, a la Trump on The Apprentice, to become the next celebrity fake president in a couple of presidents' time. Wake me up when that nonsense happens. But In the meantime, there's real things. There's going to be deflationary fear. Oh, wait for it. Trump and Melania now so sick. Oh, aren't they wearing masks? Don't the White House staff wash their hands? Oh, you mean that stuff's not working? Aren't they socially distancing? Why do we have to? How did he get sick? Oh, garbage. What a pile of garbage. They want to heat up the second wave narrative, guys. The second wave narrative of CV19 is coming. They're going to do some fear and loathing and some economic smashing. You're seeing it setting up in the crypto charts. They're going to do some October fear. We're in the month of October. It's one of the most tricky months. It's a smash him down month. Watch it on your equities. Watch it on the fear and loathing and deflation. And we will do a full dollar index analysis in non-farm. I'm not doing it for this live stream. And it is the live trading day. Go and select it on the website if you want. Live trading day. We will be live in under. We start in about 2 hours, less than 2 hours from now. Okay, good. Let's have a wee check on your comments. I'm not going to make this a long one. There's 413 of you watching. I'm really glad. Thank you. There's also 116 of you that chose to like us for the effort. I appreciate that. Thank you. We especially like the shares. So if you do that and give us a tweet out, we love you. We love you long time especially. And let's have a look at the quick comments, and then I'm going to roll it over because we will be going live shortly, and it'll be for an hour and a half on traditional markets and another hour and a half on crypto. Hardcore getting out and working to look for the trades, plus getting that news item in, which could be central to what the dollar does next. What bullshit number are they going to throw out with their birth death model and all the other stats that they manipulate? What will the results be on the dollar, which has been softening recently and has now made the neckline of an inverted head and shoulders to the upside? What will it be? So, yep, Rami's going to see us soon. Great, Rami. Look forward to it. How to leverage, says Speak Your Mind. Yep, you've got stuff to learn about it. Leverage, you have to earn the right to leverage. And the best way is to start small and make sure you understand what you're doing. Get training. Dragos, Stefan, Francis, good job. Do you think the banks will start to fail this year? We're seeing their share prices tumbling, Dragon. That's a bit of a market sniper discussion. We'll just deal with it in non-farm because we'll definitely be looking at some of our favorites there. That could start a massive bull run, maybe not in crypto. So when the banks fail, unlike you would think, oh, crypto's going to run. No, what it means is fear first. Fear first means most money runs into the dollar. And when there's fear, even fear in crypto, most money moves out of the volatile crypto to something that's stable and safe. It doesn't make sense, but that's what happens. The fear reflex is clamming up. I was on the bike yesterday, going down hills that were too steep for me. I clammed up, stopped doing the drills, stopped listening to the physics, and ensured I fell over. That's what people do. Pavlovian responses is fear. Fear is panic. They want you in a state of panic, and they want you doing the wrong thing. And money flows into dollar because that means no lose for short term. You think so? Well, no lose. They don't want to be in risk assets that are highly volatile. Guess what? Crypto is that. 65% lost in 2 weeks. Are you kidding me? Do you want to hold a third of your capital when people are afraid and stampeding around like lunatics? No, you're going to jump on the safe stepping stone on real rock. You're not going to be water skimming like a bird. So it's just, that's the way to do it. What else have we got in the comments? Diddley Squat says, bank stocks in SA have already tanked, so perhaps some market adjustments have already been taken into account. Bank stocks globally are tanking, but remember this, and by the way, crypto's gone down during that period. So since the IBEX sell-off, since Credit Agricole, Banco Santander, Standard Bank in South Africa, as the gentleman is mentioning, as a South African, I assume, ABSA, various other banks there. We've also seen it in the US, Wells Fargo, Warren Buffett, best bank in the world. Now he's dumping Goldman Sachs. What's he buying? Barrick? Isn't that a gold miner? Wazza? What's happening, bud? Why do you want the barbaric relic that sits in one hole in the ground, gets dug up and moved to another hole in the ground? How come you want that stuff? Oh dear me. Not into banking anymore. I thought America was the way. betting and never bet against America. Well, gold sure is a bet against the dollar and America, let me tell you. It's a bet against the fiat system globally, not to upset my American friends. It's not nationalist, but it's everywhere. Okay, Alpine Stars t-shirt, that's it. I believe in you. Yes, the freedom of riding. Even if you're a shit rider and you bottle it on the steep declines, you can still wear your bike t-shirt and tell everybody you love the freedom. And that's what I do. I scoot around and don't take too big a risks. Too afraid of falling after a couple of bad dumps. Yeah, I'm a better HVF method analyst than I am a rider, but I'm glad to do both. One's for fun, one's for wealth and freedom. And actually both are for freedom. That feeling of freedom is great. When the hell should I invest in Bitcoin? To do it now would not be a good idea. So when? When this move ends. Matus Pushel. Do not do it now. That's exactly what I've come in to tell you guys. In my humble opinion, which can be wrong on balance of probabilities, non-advisory, yada, 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 terms and conditions. In my opinion, not now. In my opinion, you get more Bitcoin later. That should interest you. So if it's not going up, and don't forget, if we wet the bed, and this is why I keep saying 65% off in 2 weeks, well, what if you wet the bed again? And even if it's only a partial bed wet, you could lose 30-40% in 3 weeks. You could lose 10. There could be overperformance in both these instances beyond targets. So if this one just made its target on Ethereum, my guess is you trade already sub 250. Let me give you that. You can get the full numbers on non-farm if you're interested and care enough. That's cheap, guys. You come on $197 and you get the full session plus a recording that you can watch. Recording done to super high standards on this SLR. High audio. We value everything we do to be on top quality, and you can watch it on an open-ended basis. So how long is our non-farm available for the recording?
Depends on what they purchase, either 1 month or 3 months.
Yeah, so there's a 3 month, there's a 3 sessions available for the price of 2. So for that entire 3 month period, you can access all of them. And there you can see if we're accurate or not. You know, we leave them up there. Right or wrong. Same with all my tweets and everything else. What's happened? I tweeted, by the way, before. Let me just show you this. Long before the sell-off, I said, here it is. On crypto. I'm not tweeting every minute on crypto. If there's something that's going to happen, let's have a look at it. Over the next day or 2 days ago, I see very positive bear setups on Ethereum and Bitcoin. Watch out below. That's where Ethereum was, 355.80, 355.80. Where is it now? I'm short it. It's now trading at this level, 337. So it has slipped, and it has slipped badly. Had a little exhaustive push up and absolutely thrown it down. So I wouldn't say we're wrong. You get positive affirmation if you're calling. So if you keep saying certain things, and I do this because it helps my own trading. Putting myself out there, putting myself at risk to be wrong. I do it to help my own trading. It's not about right or wrong. It's about whether you make money. And if I keep getting wrong, then I say my view's inaccurate. I've got to stop pinging here and I've got to reframe and turn the charts upside down. This is your total market cap upside down. Total market cap. This is largely Bitcoin and Ethereum, the 2 biggest. This is how it looks. This is an inverted chart. Inversions. I have a special template for it. What have you got here? Falling wedge. You've broken out an upside falling wedge. Forget this. This is mathematical error. This BTCD, the dominance, and these total charts get some cranky data sometimes. That is a high momentum breakout, a little bit of a pullback on a kind of mini wedge, and you're pumping up there. Where's it moving? It's moving up, but this scale is down. Up is actually down. That's 277 billion. This is 352. If you see this chart is going up, you're talking about a loss of value on the overall total market cap of crypto. I don't care about Polkadot and any new flying hero. Bitcoin and Ethereum is the bulk of this. And that means they're going down. And they're liquid. You can trade them anywhere. You can use light leverage. You can use hot leverage. Or you can just do investment. I'm here to warn you that you're going to lose value if you're hodling. If you're happy to do that, that's fine. I'll remind you of, for the fourth time, 65% in 2 weeks. To me, it doesn't represent value. You can, without becoming a day trader, protect yourself or hedge. If you really don't want to sell the coins and it's in a wallet and it's too big a headache, just say I've got 10 Bitcoin, sell 10 Bitcoin on BitMEX. That's it. That way you keep your value and you can close it if it does. If it doesn't, you'll know soon enough and you can close your BitMEX for a small loss. And you were covered. It's a cost of insurance against just standing there and eating it. I don't like standing in and eating it. It's too goddamn passive. There's too many goddamn passive people in this world. I'll go full reset sniper on you at the moment in terms of the absolute bullshit that's going on, that's not being resisted, not being spoken about, truth that isn't being said. There's too much passivity. Don't be passive in your investment. If it's a strong chance something can, defend yourself. That's all I have to say on that point. And on that key moment, I will see you on Non-Farm. The link is below. It's been shared. You can come and join us, or you can go to 3wsthemarketsniper.com, live trading day. Hit the button. You'll be offered 3 sessions for the price of 2. You can come on every month and get the best ideas that I'm sharing for a simple shoe-in price. You should be able to do it if you're interested in trading and if you think we're worth the while. And that will give you an idea of what you can experience in terms of interactions with us in our self-study and later our full community if you decide to do it. Okay, let me take 1 or 2 more questions and then I'm going to close out. It's 398 watching, 174 likes. Thanks for bumping that up. We appreciate it. Also, the shares, totally appreciated. BitMEX, are they still in business? Yeah. Some people saying, let me just cover that. Some people saying the Americans are now going for BitMEX, Hayes and the owners and all of that. And that's the reason why the crypto sold off. Listen, if crypto is strong as a concept, blockchain and tokens, the fact that one company operating is being bullied by the master, slave master, don't forget they were doing that with Bitfinex for a long, long time. They still have open legal cases. They can suddenly announce a new suit, suddenly do anything, anytime they like. But the fact of the matter is that shouldn't affect the concept of blockchain and tokens value being moved across it. The fact that they think somebody somewhere has taken American money to trade a derived form of that market. It's got nothing to do with it. It's not what strong markets do. They hold up under that. There's always people always hunt for a reason. I call it toe tagging. If something goes down, what's the news that happened that caused it? Until we've gone and found a excuse and toe tagged it and said, you can't just have a dead body here. You've got to have Joe Schmo written on the tag, even if there's no one by that name, just so that you don't have a dead body that's unidentified. Any event that occurs, a major sell-off, what's the reason it sold off? Quick, quick. Give us a reason. Journalists will go, oh, there were some legals there with BitMEX. Yeah, BitMEX, big deal. That's the reason why. That's the reason why. That's right. They called him. Big challenge. That undermines crypto. Yep. We can go with that. All right, headline writers, knock it out. Yeah. So today crypto fell because BitMEX, derivative platform, has been taking American money and the CFT. Bollocks. If it's strong, it's strong and it overrides it. You've seen on non-farm payrolls, bad numbers in the dollar pump. You've seen bad earnings results come out and the share pumps. If it's strong, it's strong. And you've seen good numbers come out and it dumps because it didn't meet expectations. They had a whisper number that was higher. Strong things will be strong. Weak things will be weak and subject to supposed news narratives. Ignore all that. Final question. Gold and silver up right now. So gold and silver are very, very close to our core funnel area where there's likely to be resisted. We will deal with that with way more detail in literally an hour and a half. I need to get ready. I want to do a few things before we kick off. So I will be leaving now, making my way for the door, slow motion run. I run better than I ride. See you on the other side. Thank you for sharing and liking. We'll see you on Non-Farm if you want it. If you don't, that's fine. Share it with friends. Play safe. Enjoy your weekends. Get some time off the screens in the markets. You're watching this market cap going down. That up is down. Remember that. Okay, see you later. That's our warning. Bye for now.